We have Ross Davisson, VP of Business Operations for CircleUp, and Ken Nguyen, who is about to launch a fabulous new crowdfunding platform called Republic. So great to have everybody.
Thank you, Anna.
So online investing is very similar to online commerce in some ways. At one level, it means using web and mobile technology to invest. But just like Amazon is a completely different experience than Target, at another level, the technology for investing enables a completely different form. And I'd like to first discuss the different approaches to what this technology allows. So thank you. First, I'd like you to say a little bit about your companies and what they do.
Sure. Thanks, Anna. So my name is Ross Davisson. I am head of business operations at CircleUp. CircleUp is an online platform for connecting early-stage consumer product companies with investors to seek equity investments. And we've been around for about 4 years. Our investors are all accredited, ranging from sort of high net worth individuals up through institutions. And you want me to address the question now too as well? So the online sort of world has, in our view, unlocked the potential for this new business model that we have, and that those of us on stage, I think, have slightly different variants on, but all are trying to leverage that technology. And so for us, we see this move from analog to digital and enabling so much across all industries. For us, we think about better solutions for investors. So the data that is available, the way investors can better compare companies is transformed by this. For entrepreneurs as well, their ability to connect with capital efficiently, spend their time solving problems instead of trying to seek capital is all enabled by online. For us, being consumer focused, we're solving some particular problems around that industry. And what we see there is just a wide geographic distribution. So it's much harder, unlike being in Silicon Valley where so much of tech happens, these consumer companies, food and beverage, personal care, retail, and restaurants are spread all over the country. And so one of the things our platform does is help those dispersed people who aren't here. It's not as easy to get in front of investors. And on the investor side, they aren't as localized and they're not as numerous either. And so we see the ability of an online platform to make that connection happen much more efficiently really drops down the barriers and lets those companies be successful and generate better returns for investors.
Hi, everyone. I'm Ken Nguyen. I used to be at AngelList, working with Kevin Laws in the past 2.5 years. And I'm launching right now a new platform called Republic. Think of it as Indiegogo, Kickstarter / AngelList. So it's retail investment crowdfunding for the very first time ever in U.S. history, really. Everyday people can make an investment rather than just make a donation or buy a product. And that kind of democratized investing, bringing the power of investing to everyday folks, opens up a new source of capital for entrepreneurs. And I think that in the long run, you're going to see a shift or an equalization of that imbalance in terms of gender inequality or founders in areas without traditional access to venture capital through investment crowdfunding should be able to get the capital that they need in order to grow their product. And I'm really long on the potential of investment crowdfunding. Maybe not everyone here agrees and would love to get your perspectives.
Well, we've already heard about AngelList. What's stopping somebody from, what would you advise an investor to do? Should they just go find a random investment and put all their money into it?
In our case, investor education goes a long way, but it's a really low threshold. When people put in $500 or $50, it's fundamentally, psychologically, a different calculation, a different metric than you put in $50,000. All I want my investors to know is that angel investment means there's a good chance you're going to lose all of your money in an investment. Beyond that, it's up to them to identify with company and founding team that they believe in. So it's everyone's choice based on a minimal threshold knowledge of angel investing.
I was going to say, I think as you get to larger amounts of money, one of the big things to look out for, there we go. One of the big things to look out for is being able to diversify. You can't just go into one investment. You've got to be able to go into a large number of investments. Otherwise, you're just buying lottery tickets.
Yeah, and just to add on to that, I mean, from our perspective, I think two things. So first of all, CircleUp is a registered broker-dealer. So we have a responsibility to do a series of things to confirm that investment is a good investment, an appropriate investment to put in front of an investor. So we have a sort of a regulatory overlay that should give comfort, it gives protection, it gives real protection, and FINRA has oversight on that. Also, just from a maybe should have started with just from a business model perspective and how we think about this. Like obviously, investor returns are really important. So we have a vested interest in making sure that the opportunities that we have on our platform are good investments, are potentially good investments with all the risk associated with that, of course. And so we actually do a number of things to curate our deals. So only about 5% of the companies that apply to our site actually end up listed. And that process of winning that down is a combination of some data and some analysis and also a team of investors that work on our team to help us do that.
Okay, and also what stops somebody from setting up a fake company with you?
Yeah, as a funding portal, we are basically a gatekeeper to protect investors on the one hand and pass our own lens on curating the right companies. In my opinion, or just looking at the UK, investment crowdfunding has been around for 4 years. In the past 4 years, 2,000 companies have raised up to $200 million, not a single case of fraud. And there's no reason for us to think that the future of investment crowdfunding will be anything different. Quite frankly, if I want to defraud someone, founding a company, do a securities filing, go on a platform to get $50 here and there is just not a very efficient way. So I think that I'm not too concerned about fraud, given and aware that we're a gatekeeper.
Right. That I've been rather fascinated about actually is that it actually turns out to be a terrible place to try to defraud somebody. Now, companies can lose money the old-fashioned way. They always overbelieve in their own model, and sometimes that turns out to be right, most of the time not. But if you're going to defraud somebody of money, doing it out in public where every record is kept, and the amounts of money that you're talking about are not as large as if you were to go behind closed doors and try to raise, it turns out has not been a significant issue. That said, I think our biggest protection is the investor who is willing to put their own money at risk behind, and then the other investors are following along after them.
And I think the concern on our end is less about fraud, but about investors' expectations not being met. If people invest knowing that they may lose their money, but they believe in the founding team, it may be women founders, it may be diverse founders. If the company doesn't work out and they lose their $500, I think they'd be far less pissed off than an accredited investor on AngelList or on CircleUp. So psychologically, it's just a different game.
There's always some crazy stories about what bad investors can do to a company. If you do use one of these online platforms and get many investors, how do you know if one of them is bad?
So that's actually a really important question, actually both ways, because the company is not just, the investors are not just evaluating the company has to evaluate the investors as well. So in the case of AngelList, that's where a lot of the vetting goes, is into certainly the syndicate leads. Then the investors are investing in the syndicate. So a lot of that becomes our problem, so to speak, that we will work with the investors if there's any issue that comes up, because the investor into the company is the fund that I talked about earlier, not each individual investor. And so I think that is important for any of these mechanisms, that there be some way that the company, the protection doesn't just run one way, investors from company, but company from investors as well.
Yeah, and I can add to that. I mean, I agree with that. I think there's no substitute here for the company and the investor coming together and determining, both on the investor side, that is this an investment I actually want to make? I mean, an online platform, particularly on CircleUp, where these are all accredited investors, relatively large investments happen on our platform, they are not going to only happen via a website. There's going to be conversations, there's going to be visits in some cases. We see that quite often. And so there needs to be that connection between the capital that an entrepreneur is raising and the entrepreneur themselves. And there needs to be the expectation set appropriately. I mean, I think accredited investors lose money all the time, and they're very cognizant of that risk. It's a risk-reward trade-off. Losing money in itself isn't bad. It's not having clear expectations, not being truthful. Those types of things are where I think things can really go south. So that there needs to be that connection present no matter what, and also how you evaluate the deal.
Not a surprise, in the world of investment crowdfunding, things are also slightly different. I think companies use investment crowdfunding as a user engagement, loyalty engagement program. So it's no different. It's a lot closer to buying a product. These investors don't actually become your shareholders. At least there's that option. So they have limited information right, limited consent rights. So the issue of a bad investor in my world is less of a concern for founders.
Right. I believe Kendrick actually put some work into a specific investing instrument that makes sure that works both ways, that there's a way that the company is protected from the investors as well as the other way around.
In short, it's a save or a kiss, but it allows for rolling over the conversion. So you don't convert on first equity financing. You automatically convert into the second one and the third one, but the conversion price is capped at first equity financing. So investors get all the upside without being shareholders in your cap table.
There are always skeptics and fans of online investing. Can you say a little bit about that?
Sure. At least in so far, I think the media and the venture industry, the general concern is that are you bringing the worst deals that can't get financing anywhere to the least informed segment of the investing demographics? And I think that, yes, that may very well be the case, but a lot of companies over time will see investment crowdfunding as a branding tool primarily, and not just fundraising. So companies like Airbnb and Uber and Thumbtack potentially can use this as a tool to engage the network of drivers of businesses. And so in that context, I don't think that that's necessarily true at all. So again, looking back at UK equity crowdfunding, I do think that in a short period of time, it will be a meaningful way for founders to get financing.
And I go back to kind of where you started. It's like saying you're skeptical of online investing is like saying you're skeptical of online commerce. It's a tool and a way of doing investing. Yes, of course you need to be savvy about how you use the tool. If you were to just go find some random website called Bob's Shack and start putting money out there, it's the same as if you were to do that while ordering some large ticket item online. But I don't think anybody's skeptical about placing orders on Amazon in terms of online commerce. They find all the tools are actually very helpful. So it's really incumbent on the investor to be aware of and start to navigate the online world the same way they'd approach it as navigating online commerce.
Yeah, and I think just to sort of extend that analogy, I mean, the benefits of online commerce are, there were issues with online commerce way back when, right? And things didn't show up, and you did get shipped something that wasn't what you intended or what you thought you were getting. But the benefits of what's been unlocked through that technology are just vastly outweighed, and all those problems have largely been solved, right? We see the same thing happening with online investing, with this type of online investing, and whatever variant. I mean, we think there's a really bright future for this. We think it helps investors. We think it helps entrepreneurs. And I think these issues are. I don't think there's any issues that we see that are so bad that they can't be solved. And I think this is our perspective, at least. This is where the world's going. We think the savviest investors will want and will need, in fact, to use these tools to be successful.
Are there any questions from the audience?
How does the new Title III stuff affect your platform?
He is Title III. So
He's Title III.
We should repeat the question.
Oh, the question he was asking was how does Title III, which is the crowdfunding title of the Jobs Act, affect our platforms? So we'll let Title III person speak first.
So before May of this year, in order for you to invest in a private company, you gotta be a high net worth individual. Since May, under Title III, now anyone through a qualified portal can invest in private companies that the portal accepts. So Republic is very much a Title III funding portal.
Yeah. And so for AngelList, Title III doesn't really affect what we're doing. Because it's all in the accredited world, the place where it will affect what we're doing is just for those companies that, because of what their strategy is, want to also raise from unaccredited investors for publicity, because they want to let their customers in. There's a number of reasons they might want to do it. So we do have to make sure that there's some ability for Title III to work together with a traditional financing without any of the traditional investors worrying about what happens with Title III or vice versa.
Yeah, and for CircleUp, we don't have Title III support on our platform yet. We're long-term, very excited about crowdfunding and want to see it succeed. Today, we worry about the way the regulations work and sort of the, and Ken, I think you alluded to this, some of the challenges or just extra requirements on companies to use Title III to raise capital. And our concern is around what will that do to that sort of marginal company that's debating between getting money from a more traditional means, a Reg D offering, and through this new Title III offering. We think the extra requirements might lead the company who has the alternative to stick with the old method. So it's a topic that we're engaged in. We want to see sort of continue to evolve and see where it goes from there.
One more.
Hi. If I'm an investor that wants to invest $10,000 or $100,000, what's a tangible way for me to access those opportunities on the platform? I'm just curious in each cases.
Do you want to?
Sure. Yeah. So on CircleUp, go to circleup.com and anyone can register for an account. And then once you have to self-accredit. So you have to attest that you meet the accreditation requirements, $1 million in net worth, $200,000 or $300,000 of income, or institutional accreditation. And once you do that, you get access to our site and the platform. And the platform has a number of companies. You can browse companies. You can actually join deal rooms. The companies will approve you, and you can interact with them. You can download documents. You can go through all the steps that you would expect to do. If you choose to, you can invest right away. Like I said, most often what happens is at least a phone call, some sort of interaction with the entrepreneur. But at the time, you can actually invest on the platform, sign documents electronically, and be a shareholder.
The process in Republic is quite similar, but even simpler. You don't have to be qualified. You don't have to go through any sort of verification or accreditation. Go online, look at the deals, sign up as an investor, and you can invest up to 10% of your income or net worth, and probably not put all your money in one deal, as I'm sure everyone here knows. But if you see a deal that you like, $50, $5,000, whatever it may be.
And on AngelList, it's create an account. You'll go through a similar process that you would on CircleUp in terms of the investor accreditation process. And then you pick syndicates or funds, the two options that I mentioned earlier. So do you want to invest in a broad swath of startups, or do you want to invest individual startup by individual startup behind certain investors on AngelList? So angel.co/syndicates allows you to pick through the syndicate leads that there are and shows you the deals that they have.
One last quick question.
Sorry. I don't really understand how this isn't going to be a game for suckers. Where, you said it's going to be a viable source of getting funding for companies. Nobody does that at all. But we heard over and over again this morning that it's all about the people, right? It's about being able to sit down and have conversations with them. How does this help you evaluate people?
So in our case, the syndicate leads are the ones that are sitting down with the companies. You are backing a syndicate lead and leveraging them. You should research, perhaps meet with the syndicate lead. It is a more akin to what an LP does with a fund than what an individual investor does with a company. What happens, though, is once you pick that syndicate lead, you're able to follow along, just like an LP would follow along into multiple funds, even though they're not meeting the companies underneath, and help that syndicate lead invest in a broader variety of companies. So the syndicate lead is writing their own checks into the companies. So you're following after somebody who's putting their own money at risk.
we have time for. Thank you so much to our panelists, and see you
Great.
soon.
Thank you.